Good afternoon, everybody. My name is Tommaso Leodari. I'm a Chief Investment Officer with Index NCE. We are one of the, I would say, few independent asset managers registered and regulated in the IFC of Dubai. Personally, I spent about now this year 17 years in the financial markets. I took naturally a bend on managing capital on the buy side, simply because it felt like it was a natural thing for me to do. We're generalists and we're long-term investors. We follow the value investing philosophy. And for us, China takes up about 20% of our holdings as of today. We've been investing since a very long time, almost 10 years now. And we are, I'm going to say, Orientalists at heart, in the sense that we cannot really let go of this part of the world, both economically and culturally. Simply on the basis of economic profits. So through thick and thin, we held our position in the Chinese markets, and with it, we learned so much about it. So very happy to be here and share my point of view.
No, very good. Well, let's essentially peel back layers of the onion, if you think about it in that sort of framework. Start top down overall. A couple of us have alluded that emerging markets clearly have been under pressure for the better part of 2 years on a at least relative basis. Clearly everything has gone up, or not everything, a lot of emerging markets, but the broad-based emerging market index has traveled higher year to date. But it really looked like it was catching on fire back in October, September, October. Clearly, there's a spark that came from China that created that, and the U.S. election has pulled things back. We'll get into both of those elements, but broadly speaking, if you think about emerging market equities as a class relative to developed market equities, do you think 2025 is a relative winner after having been a relative loser for 2 years? And what's your take on this in short?
I'm qualified to comment across emerging markets. I would say that, again, our position is very substantial and concentrated in China, but we do have some holdings in Brazil. My really long story short, if we are in an environment in which the oil price will remain sustained because of instability, call it instability in the Middle East, or just generic geopolitical instability. That means that inflation is not going to really go down, which also will be fueled by what Trump wants to do in terms of tariffs, which means inflation is not going down. If that doesn't go down, interest rates are not going to go down. If interest rates in the United States don't go down, the dollar remains strong. So in a strong dollar environment, usually emerging markets are not really going macroeconomically very fast. And this is the macro picture. If on this sandwich of instability, we want to insert the fact that China is at the crossroad of imperial struggle against the antagonist, which is now the dominating power in the United States, then it looks like, at least from a macro perspective, we're not looking at a very clear-cut picture of advantage for at least China and Brazil. Last slice of the sandwich that I would add is that emerging markets are still, how can I say, invested in by Western investors. And Western investors are digital in what they do. Doesn't mean that they use telephones or digital smartphones. It means that they either invest 100% or they don't invest, which means that their investments is zero. This kind of digital binary, I would say, almost inflow and outflow into all emerging markets determines those scenarios that we've seen in the past 2 weeks. Prior to the election, China was going up because it seemed like the authorities were doing fantastic and they were just, entering with the right measures. As the election came back up and Trump won, which is an anti-China sort of presidential power, then the entire thesis started to retrace. So were we in a normalizing and growing Chinese market valuation, or were we not? My fear is that we're still not there from a macroeconomic picture for Western investors to come back to at least the Chinese thesis, so that market valuations will adjust to the proper amount.